Hey guys, wanted to come on and do a quick video, easier than typing it out and likely going to make more sense if we show you the visuals. So we'll start with the golden and death crosses. So a golden cross just refers to the daily time frame. So you go to the daily chart and you look at the 50-day moving average and the 200-day moving average. So when we talk about death crosses and golden crosses, that usually means we're talking about the daily 50-day moving average and the 200-day moving average. So a golden cross occurs when the 50-day moving average is below the 200, and then it starts to curve and starts to cross through in an upward fashion. So when we have the 50 below the 200 and the 50 crosses through the 200, that's called a golden cross. Now on the flip side, when we're above the EMAs, when we're below the EMAs, that's resistance and considered bearish. The moving averages, not the exponential moving averages, and I'll show you that next. But the same thing remains, even the EMAs. When we're below EMAs, that's considered bearish, and then same thing here with the moving averages on the daily time frame. When we're below those moving averages, we usually gravitate back towards them, and then you can see here it confirmed it as support, and then we got above it, we had the golden cross, and now it's acting as support. So when we're above the moving averages, that's perceived as bullish, right? We even back tested it perfectly here. And then we went up to a new, that was the February high there of last year this is the Hexo chart as an example. But then look what happened. We started to lose the 50-day moving average. It was no longer acting as support. We came down, we held the 200, but then look what happened. We continued to struggle. And then with the 50-day above the 200, crossing downwards like that is a death cross. So again, when the 50-day is below the 200 and it crosses, that's a golden cross. When the 50-day moving average is above the 200-day moving average and crosses down, that's called a death cross. And look what happened. After that death cross occurred in August, we dropped all the way from about $5 down to below 50 cents. So that's the power of knowing what a golden cross and a death cross is. Now, we're still struggling at the 50-day moving average, so it's perceived as bearish. If we can get above it, confirm support, then it's going to be perceived as bullish, but we still got a long ways to go before we would ever see those moving averages cross again as a bull cross and a golden cross. Now let's move on to the SPY chart, because this is what spiked the question. So isn't it bearish if the EMAs, so we have the EMAs on the weekly time frame, we have the EMAs on the daily time frame. You can just go here to indicators and then type in EMA and then it'll come up. But you can see here I have mine set to the 12 and 26 period. You can use the 4 and 8 period as well. That's generally for shorter term time frames. So if you're a swing trader or a scalp trader, you can use those shorter term EMAs. But personally, I'm more of a swing trader and investor, so I look at the longer term EMAs, the 12 and 26 I really like. So in this instance, on the daily time frame, you can see here we're struggling with the EMAs. It's acting as resistance. We're below it, so that's perceived as bearish. We tried to have a bull cross here of the EMAs, but it failed, and we could attempt it again here if we hold these lows and attempt a weekly bounce and weekly trend change. So it's all about 420.76 right now on the S&P 500. Now look what happened. We rejected at those EMAs. We were below it. So it's confirmed as resistance now, right? We're below those EMAs, so it's perceived as bearish. We even had those upper wicks signaling that we could see a bit more sell-off and weekly consolidation. That's exactly what we got. As soon as we lost the low here at 438.94, we started weekly consolidation. Even if you just exited there, that would have saved yourself about 3% worth of downside just once we started weekly consolidation. So that's how important it is to understand weekly uptrends, monthly downtrends, and when weekly consolidation begins, when the weekly bounce begins. It takes a while, but it can really, really help you. So in this instance, we had, let's take a look at the EMAs. So the last time we had the EMAs on the weekly on the S&P 500 cross bullish was back here in June after the March COVID 2020 lows. So we had a bull cross, the 12 period. So we look at the shorter term EMAs, the 12 was below the 26. And when the shorter term timeframes cross or below the longer term and they cross, that's called a bull cross. Some people like to call it a golden cross. It kind of means the same thing, but I use golden cross and death crosses for the daily time frame, specifically the 50-day moving average and the 200-day moving average. We're looking at the weekly time frame, so automatically it's not a death cross or a bull cross, and we're using the EMAs, not the moving averages. So we're using exponential moving averages. So rather than calling this a golden cross, I refer to it as a bull cross. So the shorter term crossed through the longer term after being below, and then look at the upside that came afterwards. Now, We have the shorter period above the longer period. That means we're bearish because we're crossing now and we're losing those EMAs as support, and they're now confirming as resistance. Look where we topped out, right at the high of that candle body was right at EMA 26. Now, the fact that they have already crossed means we might see limited downside from here. Now, if this was, like, let's just go back to here. Let's say we were at this level right now. We hit a low of 425, and these EMAs just barely were about to cross, but the yellow line didn't quite hit the white line. That means that we could see them cross and see more downside. But the fact that they've already crossed and we have a bit of a lower wick here on the weekly is a good sign. We could be limited to the downside from here, and as long as we hold 420.76 and then we break support up at 458.12, that's going to confirm a weekly uptrend and the crisis will be averted, and we can likely expect a monthly lower high somewhere around the 460s. But what I could see is a tightening range where we just bounce and tighten up, and then we get the bull break or the bear break. But I think we're just going to tighten up here into the end of the month, and then we'll get our break next month. Similar with Bitcoin, what I could see is forming a little bit of a lower wick here on this monthly candle, and then next month, perhaps we have a monthly inside bar, we break out of that inside bar, we get the monthly bounce going, we come up to around 460, 470 maybe, form that monthly lower high, and then we roll and confirm a monthly downtrend and enter a multi-year bear market. That's what I'm expecting. And same with Bitcoin, really. If we take a look at the weekly time frame, just looking for a weekly high or low, trying to change that weekly trend. Bitcoin's already in a weekly downtrend. But now, same thing. We're probably just going to go sideways or a monthly inside bar right now on Bitcoin. We could easily form another monthly inside bar. So to be very simple, let's say we hold the low here at 36,259 on Bitcoin. If we start the next monthly candle inside that range, then resistance will be 45,855 and support will be 36,259. If we lose 36,259, we could be in trouble. We could be going back down to that 28K on Bitcoin. But if we break resistance next week at 45,855, that will confirm the monthly bounce. And then what I could see is a potential lower high somewhere around the 55 to 60,000 area. And then once Bitcoin tops out and starts to pull back, that's when the alts start to run. And then once altcoins are done, Bitcoin probably loses its support, confirms a monthly downtrend, and bear market confirmed. So hopefully that helps. Like I said, it's easier to do it in a video. If there's any other questions regarding that, or anything you'd like me to clarify, or anything else that you want explained, just let me know. Have a great day, everyone, and we'll see you a little bit later on for a before market close video.